You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for the bi-weekly options extravaganza known around these parts as the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network, reminding you this content is available pretty much wherever you find your finer audio programs, of course, on demand, everywhere under the sun. More and more of you enjoying it on YouTube. Hey, we don't judge. It's fun. You can quote-unquote watch it. It has a nice static image that it uploads with it as well, so you can listen to it, which really is, we know, the real reason most people use YouTube these days anyway. They listen to something while they're doing something else on another tab, right? So the content is available there for you. Of course, Audible and, your Apples and your Googles and everywhere else. You want to engage more, you want to get the live, you want to ask questions immediately, all that fun stuff, head on over to the Plus. If you want to go above and beyond, including our awesome pro Q&As, then yes. And of course, Options Oddities, all the other fun stuff. And we have a sweet Pro Q&A coming up next week. We'll get to that in a little bit. Then, of course, the optionsinsider.com/pro is the place to go. And, of course, however you listen live after the fact, make sure you keep rating and reviewing on your platform of choice. It does help all the new folks discover the content. And, of course, for a day like today, Mail Block Thursday, get those questions in. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from on the old program today. First, let's go out to the place where it's never sunny. They say it's always sunny in Philadelphia. It's always dark and stormy on the shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show, sir.
It's good to be back. I was pretty grumpy this morning, but I'm not as grumpy right now, I have to say. So, and you know what? The dark and stormy shores that we had last night, while my kid left our car door open, so the car filled up with water. So that was nice this morning. But it's sunny now, so thus my disposition. You're gonna get the sunny lobster today. Sunny lobster.
And of course, you're happy because you're on the option block. No one can be upset and take umbrage when they're on the Options Insider Radio Network, a place of joy and fun for all. And speaking of joy and fun for all, that's always going on in a little provincial hamlet known as St. Charles, where we are joined once again by the reigning king of St. Charles, a.k.a. Mr. Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome back to the show. How goes the crown fitting in St. Charles, sir?
I don't know about that, but I do want to say something with all sincerity. We've done this over 1,000 times, and I got to say, I look forward to doing it just as much now as I did back when we were doing this about 950 episodes ago. So very happy to be here as always.
Glad to hear it. I think the audience is glad to hear it because they're always glad for new episodes. They're champing at the bit. Hello to everybody joining us in the Plus and the Pro on the live there. We love all you folks. We love all of you. But those folks who get to engage with us throughout the show, you're always fun, always welcome as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we break down what the heck is trading. What we're getting on the screen today is mostly a whole bunch of red. Not quite as much as red as there was a little while ago, but still a lot of red on the screen. Most of the major indices are off close to 0.5%. The S&P off about 0.45%. Dow pretty much the exact same percent. And the NASDAQ, a bit of a laggard, only off about 1/3%, but still a fair amount of red on the screen. We were seeing a lot more juice on the vol front, even, not that long before showtime. We still had VIX with a 19 handle, about 19.25. That puts it down still a point from last show, but coming into the start of the show now, VIX has dropped more, even to about 18.5. So that puts it pretty much down to about 1 3/4 points from where it was on this last show. So Rock Lobster and I were pontificating before showtime. One of these weird days where the market's down and vol's down. Don't see that out there too often, but that's what we're seeing out there. VVIX at about a 115 coming into showtime puts it down, about 6 points from this time last show. And then we've got our old friend VXX, the ever-eroding, ever-faithful, was at about a 26. That puts it down about 0.5 point from last show. Of course, as the vol has continued to erode, right before showtime, it has lost about another 0.5 point. So it's down to about 25.5. That puts it down about a full point from where it was this time last show. So seeing that second gear, that second leg of the erosion kicking in out there. Let's see if that's the same deal out there in our old friend UVXY. UVXY coming into showtime was at about 22.25. That puts it down about 0.75 point. It has lost about another 0.5 point as well, down to about 21.75 right as we kick off the show. So that puts it off about 1.25 points from this time last show. So just seemed like in the last half an hour or so, all of a sudden the downside in the vol has been kicking into high gear. We shall see if this continues or if the sell-off can exacerbate and juice this vol back up. We shall see. Since we're talking all this vol coming and going, let's go out to the land of the ever-sunny, ever-joyous Rock Lobster. Mr. Rock Lobster, sir, what's lighting up your tape in this where we have markets down and vol down, sir? What's your take?
Well, I have to agree with my cohort, Mark. He talks about this a lot. The VVIX is pretty high. And probably, and we've talked about this on the show, like every SPX SKU indicator, I think every bulge bracket firm has one. Our indicator is showing, the most bearish days since, whatever, right? But the reality is a lot of that downside is bid. Not necessarily in the front, although it picked up over the last several days as we've been sliding down a little. But yeah, there's a bid for that downside, continued buyers, not a lot of sellers as there normally is. So the liquidity providers, they're not in the business of offering puts for free, right? So if traders want to buy them, they're going to leave them expensive till traders sell them. And it could be months, it could be years. They don't really care, right? You traded in the S, you understand the gig. So I think from that point of view, as we're sliding down, like the market's going down, what are we down? 1-2% from the top? I don't even think we're down 3, to be honest. What would that be? 1,200 points, 120 SPX points. I don't feel like we're there yet. So we can't sell off. So, what that does is, if you're a liquidity provider, generally, what do you have? If you've sold those puts, you're short futures against them. And on some kind of delta, I won't go into the skew craziness, but you have kind of this short future, short put position. And, I'm oversimplifying, but the market's going down a little bit. So your short future position is doing well. And if you don't have a real rise in vol for the puts that you sold, and you actually might even have a little contraction and the curve collapses, the delta of your puts are way underperforming. But if you short them, that's great. So, you have a position where the liquidity provider actually has a chance to do very well because their puts they're short them and they're not outperforming, but their futures are making money as we just kind of just grind down. I mean, it's actually a perfect market for that position. As people that trade butterflies or ratio put spreads or anything like that know, like, wow, why am I making all this money? Well, because the hard delta, the real short delta, the hard delta on the position is doing well because we're dropping, 20, 30 points a day SPX. But, those little wiggly deltas that are out there at the 25 delta level or lower aren't really performing because they already were so expensive relative vol-wise to the at the money. Now, I know this all sounds like, what the hell is he talking about? But spend a couple of years trading the S and the skew, and you'll learn how to do it, or you could just join Option Pit, and we can show you how. But I think that's what we got, and that's one of Mark's points. Like, there are some put buyers out there. They own them. And people have, in the past, have dumped their beautiful stocks, their Googles, their Apples, their Amazons, only to watch them come ripping back. So there's a lot less willing sellers out there. So that's how the vol can go down with the SPX going down, because you're not getting real gamma real performance. The gamma's really not kicking up on the options that people are long. They're making a little money because they own the put and the market's down and still performing a little bit. But relative to the vol they paid and delta, it's not that great. So that's where we find ourselves, right? So you've got to sell off, and I'm looking at VXX, which I'm not complaining, is only up 11 cents. And like, there isn't that, I'm sorry, but there's just not a bid for it. And the people that own puts, they're kind of in the business of selling what they own. So that's compressing a lot of action, at least for now. So that's how I read the action. Mark's been pretty good at being in front of a lot of that. And I was disagree with him this morning. I thought, today would be the day I'm going to get some money for all the junk I own, right? Nope. It's not going to happen. I'm going to make money on the short vol. So it's one of those things where I think that's kind of what we have, and it's a I call it vol fatigue, right? Where the market is pricing vol pretty expensive. We're not moving enough, and vol will stay as expensive as it needs to until the liquidity provider needs to move it to somewhere else, either higher or lower, and that's what we have right now. But if you're buying straddles in the SPX, even though we've had the drop over last week, not easy to make money in those things. So I'll just kind of leave it there. But the reasons why we discussed on this show many times is, trading the SPX, the VIX, and these products, there's a lot of math and a lot of the math of skew involved. And that's why they do the things they do. And once you understand the mechanism, it's a whole lot easier to price and trade a lot of the options. And that kind of takes your, I say, skill level from kind of lower to higher, because like the underlying short vol position, you're like, wow, hey, that can make a lot more money than I think sometimes. So, and it could also slap you upside the head as well. But we don't have the face whipping rallies anymore, which is making my life a lot happier. So anyway, that's what we got. That's why we can have down market, down vol. And until we actually get some realized vol and it climbs out of 8%, remember, we've got like an 8% realized vol for SPX and a near 20 VIX. So it's not normally like that. So, and I think so. Anyway, that's the answer as to why, at least the way I observe it, we can have a down market and down vol, and we could have another day of it tomorrow as well. So, listeners, if you want excitement, at least for today, looking at how things are trading, it doesn't feel like it's going to be an SPX and VIX. There you go.
Yeah, the chat's all saying the days like this kind of spook them. Days when the VIX is down and the market's down, they're expecting more craziness on the tape tomorrow. Speaking of hedging the SPX, it's funny you bring that up, because we had a question about this on our boot camp show earlier this week, and I was talking about how do they hedge the S when they were confused when there isn't really an index. We were talking about using the futures. And as I did that, I kind of caught myself, because I realized now, the big futures kind of going the way of the dodo. It's all E-minis. And I still recall when the E-minis first kicked off, and there were you only limited to a handful. I think you could only do a max of like 20 or something like that. So they were trying to prevent the E-mini from cannibalizing the big future. And lo and behold, a few short years later, here we are. The E-mini is pretty much king of the roost and everything else going the way of the dodo. So intriguing times afoot out there in the land of the S, not the least of which, of course, downside puts. We can talk about the crazy premium to the downside puts for a while. Now we have an actual down day and not quite delivering the bang for the buck that perhaps those folks who were paying these ridiculous skews, I think it was 30+% premium at one point to the at the money there, maybe not getting the bang for the buck that they were paying for. Let's go out to Uncle Mike. On our last show, he shocked the world. He said, the Perma Bull had kind of pared down a lot of his deltas and was getting a little skittish. Mr. Uncle Mike, a few days later, how has that position evolved? Are you still paring down the deltas and still kind of flat? What's going on in land, Uncle Mike?
Well, I still have some delta on, and it's very, very rare that I have no deltas on. So I'm not.
3 deltas. You have 3 deltas. There you go.
Well, I kind of literally do in one of my per contract ratios, actually.
See, how did I know?
So, but yeah, with that, I think that where we are right now, one thing that I was looking at this morning, I'm just looking at the markets before we open. I'm thinking, okay, I think maybe we'll have some craziness in the first hour like usual. And then I was expecting a little bit of a move later on, but then I noticed it is Yom Kippur today. So a lot of times with that does pare back volume, and sometimes weird things happen along those lines. Just when you have the holiday that's not recognized as a holiday, as a market holiday, sometimes weird things can happen on it. So that might be an answer as to why we're having the vol SPX relationship with which we have today. As in addition to everything that Andrew had just said, I am not sure. I'm not a vol person per se, but on here, a couple of things with which I'm looking at. We are just a few percentage points off the high. And I'm probably still in wait and see mode before I start putting on too many more deltas. But I am currently just trying to figure out spots with which I want to add more deltas on. And I'm not quite there yet. It's interesting that a couple days ago we had somewhat of a sell-off. Yesterday, we had the big day to the upside, but these really aren't major moves. We're not having a 2% day. We're not having a 1.5% day or anything. I don't even think we've broken 1% on the day for how much movement we've had in the marketplace. 10-year note's been relatively stable. We are having somewhat of a sell-off today in the 10-year note, so we are getting a little bit of action there. And with what's happening today, I think that a lot of this can be attributed to just general market movement. I mean, we're down 18 points in the S&P. That's not a lot. And then final thing that I'd like to say in terms of the E-mini becoming the 800-pound gorilla in the room, I think that just one of the reasons that is because just with the sheer size in and of itself, the fact that the S&P has grown so much since those contracts have come out, the E-mini ain't so many anymore. So I almost think that they need another mini or a micro or something like, or a micro, I should say, to serve the purpose with which the mini was when it first came out. And we're just going to continue to get smaller and smaller contracts as the market grows. So that is what I am seeing today. And happy Thursday, everybody.
Well, your prayers have been answered, Uncle Mike. They do have the micro futures over there at CME. And now they do have the micro options as well. Those kind of just listed a few months ago. And they're actually doing some decent paper. I mean, they're still kind of new, but doing somewhere in the 20,000+ contracts a day range. So not bad. Again, it's a micro. So take those numbers with a bit of a grain of salt, but still. So yeah, everything small is big in the land of futures and futures options. So the big future, yeah, that thing is way too enormous for 90% of the clientele out there. The E-mini is even too big. Then forget about the old days of the big future. But yes, interesting stuff afoot. If you want to know more about the micros and the minis and all that craziness, what's going on in the world of futures options, stay tuned for TWIFO coming up in a little over an hour today. We'll break all that fun down and a whole bunch more. As we keep breaking down, let's begin to breaking things down. Let's break down what's going on out there today. And this little bit of back and forth is putting up some numbers. It kind of depends where you're looking. VIX, for example, doing a little bit, not a ton of paper, not even half of its ADV, which, by the way, the ADV is ticking up, getting more robust out there, 442,000. So it has ticked up quite a bit, about 10% from where it was a couple of weeks ago. Volume today at about 177,000, so not quite at that half of the ADV level, but we'll see if this vacillation can continue, maybe that'll drive a little bit more vol activity out there. The SPY doing some paper, closing in on 3 million contracts right now, about 2.92 million contracts. So that's pretty well beyond half of its ADV, which is about 4.5 million out there right now. The S, 758,000. That's about where it normally is on a decent day out there right now. The ADV has ticked up out there quite a bit as well. Remember I said it was kind of glued to 1.25 million for a long time. It's closing in on 1.5 million now, 1.46 million, which is a lot of paper for the S, especially in this post-pandemic world we all live in now. The Qs, 828,000 contracts. The ADV, 1.37 million. So it's on pace to hit, if not exceed that today. And small caps, kind of the laggard again today, 379,000 contracts on the tape for the IWM. The ADV is about 653. Let's go on out to the single names. Let's see what you folks are slinging left and right. Got some newcomers in the top 10, which is always fun. A little bit lighter on the top 10 today as well. Usually it's around at least 220, if not 250, to break into the top 10. Today only cost you 179,000 contracts to break into the top 10. That gets you to BABA, clinging to its space in the top 10, but just barely. Number 9, we got AMD, 209,000 contracts. Number 8, the Amazonians holding firm, 225,000 contracts. Number 7, good old BBIG, the name that everybody wanted to write in for our meme palooza question we had last week for our poll question, aka Vinco Ventures, of course. So it sounds like, just judging from the write-ins, that one would have done pretty well in our which meme name are you currently trading poll. That's number 7, BBIG, 248,000 contracts. Number 6, Lucid. They're, of course, the parent company of Lucid Motors and everything else. This is Lucid Group. Not even at number 6, not even breaking 250,000, 249,000. So we're just kissing 250,000 and we're already at number 6. So a little bit of a lighter day out there today. Number 5, a newcomer to the top 10. This is IRNT Inc., ticker symbol IRNT. They have traded 271,000 contracts out there. Looks like this is part of the whole SPAC madness out there. This is a cybersecurity firm. So you got cybersecurities, you got SPACs. Those two usually are a combination for some volatility and some paper. Let's look really quickly, see what that name has been up to. Yeah, this thing was trading pretty much $10 for the entirety of the last year until looks like late August of this year. And then it just gapped up to 13 and then up to $18.84, and now where it is right now, $39.89. So up a whopping $29 just in the past month or so. Not a bad little run here for IRNT Inc. And again, doing 271,000 contracts. Number 4, AMC, the reigning king of the memes, easy for me to say, reigning king of the memes out there. And now announcing recently they're going to take Ether and everything else for their tickets pretty soon out there, which does make sense. That goes hand in hand with the crowd that is buying up AMC right now. They want to also sling some Ether, maybe some Litecoin. Maybe they got caught up in that crazy pump and dump fiasco. Don't know what I'm talking about? Check out Crypto Rundown from Monday listeners. AMC, 293,000 contracts on the tape for number 4. Number 3, yes, I said number 3. It's Tesla, 601,000 contracts. What could usurp Tesla at number 2? Well, it's actually the usual big dog. That's Apple. You know, the old buy the rumor, sell the fact. Maybe some folks not super jazzed about the refresh for the iPhones and the iPads. I don't know. Either way, only doing 747,000 contracts. That's not a heck of a lot for Apple at this time of day. Let's see what stock's up to. Stock's off about $1 or so. Not a huge move for them. Everyone was all concerned this time last week by the Epic announcement. Now, of course, we have new iPads to sink our teeth into and new iPhones. Apple, 747,000 contracts for number 2. Yes, I said number 2. What is number 1? What has trumped Tesla and Apple almost combined? It's Palantir. Palantir on the rampage today, doing 1.08 million contracts out there. Let's see where Palantir is right now. I said this before. Ever since their last announcement in their earnings, they have just been on another level from a volume perspective. They've been in the top 10 pretty much every time we crunch the numbers out there. This is the first time they've been at number 1 since that announcement, I think, though, or if not right around that time. So it's been a little while. Usually they're hanging out, in the lower half of the top 10, maybe breaking it a few times. But today, doing some numbers. The stock's up 1.25 or about 4.5%. I'm trying to see what's driving all this flow out there. I did see IBD had a write-up today talking up the 28.33 call spread. They said everyone should go out and buy this call spread. They thought that was the best trade in Palantir. They were very excited about the quote-unquote risk-limited options play of the bull call spread. Have you heard of a bull call spread, listeners? So, yeah, IBD talking up to 28.33 out there, listeners. Are you a fan of that? Somebody clearly is, to the tune of 1.08 million contracts. I did pull up the numbers just to see really quickly what folks are trading out there in Palantir. And it doesn't look like the D spread is lighting it up, despite the love from IBD. It's actually the SEP 28s having done 122,000 contracts right now. So that's a lot of paper for a contract that is going the way of the dodo tomorrow, followed by almost 100,000, 98,000 of the SEP 29s, and then 61,000 of the SEP 30s. My goodness, that's a lot of paper. You're talking nearly 300,000 contracts just in those three options out there. And there's still 1.1 million contracts that traded total today. So you still got about 800,000 other contracts lighting it up. So some folks are just on fire for all things Palantir out there today. Let's look really quickly. Not a lot to be on fire about from an earnings perspective this week. Like we said, there are a couple of names you may have heard of. Oracle was after the bell on Monday. We had IBEX, everyone's favorite, Skillsoft. These are the names we're getting now. Mytheresa, we're kind of coming into the dregs of the season, listeners. Jinko yesterday. Weber Grill yesterday before the bell as well. Even had someone hit me up about Man United. Apparently they're public. I didn't even know that. So you could have the Manchester United coming off tomorrow before the bell. So there you go. You want to trade your footballers, then there you go. You can. So far, the season having shaped up, listeners, looks like around 86%, which is the best season we have seen in quite some time. And the last 2 weeks, barring any sort of revision, which can happen, Matt and his team are always revising these numbers over there. But week 5 and week 4, both in the green. Week 5 at 100%, week 4 at 107%, which I believe that was 106. So that one has been revised up, obviously. And again, holding at 86% now for the season. Will our next season, will that bring the thunder? Will that change things up? We do have some names actually popping off next week. I was joking earlier, but we still have some names coming. We have the Meatballs' favorite, Darden Restaurants, on the 23rd before the bell. They're at 149, pretty much even. They're pricing in 740 in the past. They've moved 952. Seems like the smart play out there, given where Vol has been of late. Rad, my old friend Rad, a.k.a. Rite Aid. 1790 is where they were trading. They were pricing in $1.76. In the past, they've moved $2.75. So a lot less juice in Rad. Again, hard to argue against that. We had Costco popping off on the 23rd as well. 460, almost 461 is where the stock was. They were pricing in 12 and a quarter. In the past, they've moved 11 and a quarter. So a little bit of extra juice out there in Costco land, which is intriguing and not something we've seen a lot, especially in some of these retailers and indeed these big box clubs out there. Well, so we got Nike too. Let's go to Nike on the 23rd after the bell. 23rd, kind of a hot day next week. They're at about 158 going into this report. They're pricing in 817. In the past, they've moved 931. So it seems like, despite what we've been saying, how this is the best season we've seen in quite some time, folks are still fading a heck of a lot of vol. Is that the right play? Kind of hard to argue with it, given what we've seen out there. But we shall see. Oh, by the way, if you are curious, if you want to sling some Manchester United, ticker symbol appropriately enough, Man U, M-A-N-U, they're popping off tomorrow before the bell. They're trading at $17.50. They're pricing in 60 cents. In the past, they've moved a whopping 64 cents. So a lot of action out there in Man United as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wonderful. Let's get wild, perhaps even whimsical. How many W adjectives can we throw at the Odd Block? Of course, the segment where we unleash the Eye of Sauron, see what it fixes its fiery gaze upon. And let's see, our first name is actually a newcomer to the Odd Block, which I guess, given the history of this name, is a little bit surprising. This is BOWX Acquisition Corp, ticker symbol BOWX. If you're not familiar with this one, this is a SPAC. This is, remember in all the debacle that WeWork had the last couple of years, they kicked their founder out, cooking the books, all sorts of shady business. Then, of course, the pandemic did them no favors. All of a sudden, no one wanted to be in an office, let alone a shared office. So that kind of business model went the way of the dodo. BOWX is now in the wake of that, and they had an IPO scheduled. It all fell apart. There were issues with SoftBank, all kinds of issues going on with the WeWork thing. But now the plan has been, and was announced back in March, that WeWork would still go public through a merger with BOWX. They're a SPAC, effectively. They're BOWX Acquisition Corp. The deal was announced back in March. About $7.9 billion was the net value of the deal. Sounds like a lot for WeWork, but then again, at one point, SoftBank was claiming WeWork was valued at $47 billion. Which always cracked me up, because if you've ever been in a Regus or anything, this model has been around forever, this shared office model. It's not like Regus is demanding all these crazy premiums, but somehow WeWork managed to sell themselves as a tech company, even though they were an office rental reseller, really. And somehow that got them these lofty valuations that probably you don't see in a competitor, like let's say a Regus out there. Not looking good for WeWork and also for BOWX. And WeWork, even though they're saying things might turn around next year, still hemorrhaging money. They lost about $1.3 billion over the course of the last 6 months. Let's look at it. BOWX now. This is a SPAC, so they're not really going to trade around a lot. They're going to effectively, whenever the valuation of the deal is that they announce, that's pretty much where they're going to trade. This thing went out last year in October, right around $10, $9.80. So I think it had some, I don't know if these are pricing issues or what, because there were a number of periods in November there where it fluctuated between $10 and 10 cents. So I don't know what was up. October 28th, trading $9.89. October 29th, trading 10 cents. October 30th, trading $9.80 again. So hopefully that's some pricing errors. Otherwise, there was a lot of volatility going on in that first month or so out here in BOWX's life. If there were options, I'm not sure if there were. Of course, if the stock is a dime, you have all the options you could buy right there. Hopefully a lot of you bought it at a dime and sold it at $10. Looks like you could have done that repeatedly from throughout October and November, at least 5 or 6 times. So maybe this is bad data on this chart. I don't know, but that seems odd. Then it hung out. Again, it is the odd block, so it's appropriate. Then it hung out at this $10 range for most of January, got up to $11 very briefly, then sold off back to $9.83 by March. And then in March was when this deal was announced for WeWork, again, valuing it at about $7.9 billion. I'm not sure what level that is for the stock, but the stock rallied up to about $13.71, almost $14. I'm guessing that's somewhere where the deal maxes out at. And it hovered there for a little bit. Then it sold right back off to about $12 again in April. And then it hung out around the $12 level for pretty much a while until June. Then it kind of kept selling off again, back to where we are right now, right around $10, pretty much exactly today. High nines to around $10. And it's been hovering there pretty much ever since July. So intriguing times. Not a name you expect to see a lot of paper on, even though it does do about 1,400 contracts a day. I have to imagine some of that is maybe skewed by some paper it's seeing of late. So what caught our eye of Sauron out there today were the Dees 12 halves. Yes, I said 12 halves. The 52-week high on this name is almost $14, $13.93. That was back in this frenzy of upside in March and April. And someone gobbling up the 12 halves in Dees for 57.5 cents. If you're wondering, listen, that's an 87 vol, so that is pretty rich. Weird thing, too, the market was 25 cents at 75. I'm still going to assume they bought them, but this market was terrible. Obviously, they don't do a lot of paper, so not that surprising, but they could get almost 20 cents better than the offer. That's pretty interesting. And they did almost 10,000, 9,250. The stock was pretty much right here, right around $10. So, yeah, they have through the end of this year for BOWX to pop and have a bit of a rally. Also worth noting, it seems separate, but it was about an hour and a half before the call trade went up. But another bullish trade went up right before then. It was a Sep 10 put, looks like a 10 put roll, effectively. Someone rolled the short 10 puts from September out to October, did it 1,555 times. They sold the 10 puts, 52 cents, bought the 10 puts in September for 9 cents. So they did that spread for about 43 cents. That's about a 35 vol on the OC puts. So kind of strange that on the same day, a name that doesn't do a lot of paper would do effectively a 3,000 contract short put roll and then an hour and a half later, nearly 10,000 contracts of upside. This is not enough to pay for the calls, not by a long shot, but still interesting that we'd see two predominantly bullish trades in the span of about an hour and a half, and a name that doesn't trade a lot, Mr. Rock Lobster. What are your thoughts on this? Someone gobbling up all the upside, and perhaps someone else, or perhaps the same person, also selling some out-of-the-money puts here in everyone's favorite WeWork SPAC, BOWX.
I don't know. I was trying to think of a worse roach motel than a WeWork SPAC.
Yeah, WeWork's bad enough, but a SPAC for it, yeah, that's not good.
And then a SPAC for not only, just where you put money in and it never comes out again. I mean, is that an uncharitable way to characterize this?
Of course, you could have bought it for a dime and sold it for $10 about 5 times within the span of like a week earlier this year. So that would have been a good trade.
I guess so. I mean, and we do have some guys that, keep an eye on all these funky meme names and all that kind of stuff. And I like how it's just $10 now. I find that interesting. Like, okay, it's $10. It's sort of like, I'm looking at it's like it's been $10 for the last month. So I feel like something has happened with this particular name. I just don't know what it is. So again, I'm looking at I'm looking at this. I don't know. Are you sure 10 cents? I think there might be some bad prints in there. So I think
that's what I'm guessing. That seems like ridiculous to vacillate between 10 cents and $10 over and over again. I'm guessing my chart data was bad. Yes.
Yeah, I mean, it looks like there's just some sort of cash level at 10, or I don't know, but it seems like 10, it likes to sit there. What drove somebody to buy the D's calls? Again, just the problem with these SPACs is you don't know what the value is. Like there's just had a takeover in SPRT, where like the tender was kind of an oddball tender, and I would just tell people to anyway try to understand what's going on with the funky financial product. That's what these SPACs feel like. It's kind of throwing more confusing financial products to retail, which I don't really think I can see private placement for these things. I don't think it's a great publicly traded vehicle personally. I think for some of my students, they like trading them because they just keep an eye on the squeeze and stuff like that. But I think for the average person, probably not the best product to trade. So that being said, 55 cents, 57 cents. Sure. I mean, I don't know why you would want to buy calls in this thing. And then somebody sold the 10 puts for 50. Okay. And I could see maybe like a little risk reversal action. But again, I don't know. You don't have any idea what this thing can be worth. Again, like any equity, but like I still feel like there's like these big vacuums in these SPACs for valuation, that the vacuum could be a big valuation or the vacuum could be a small valuation. So I would say tread lightly. This is not my favorite trade, I have to say. I understand the risk reversal. There might be some deals why it's stuck at $10. Like I see why you would want to do the trade there. It's just the understanding the funk of it I don't get. So, if it's too funky, I prefer to just avoid it.
That's a lot of funk. We'll keep an eye on this one. I'm with you. I don't want to touch these calls at all. They're decently rich, so I guess a covered call would be a little bit more attractive out there. But yeah, all of this is weird. That's why it's in the odd block, listeners. We'll come back to these. Speaking of coming back to things, let's come back to some of the names we've profiled actually very recently on the show and see how they're faring. Let's go out first to VICI. This is VICI Properties. VICI out here. We talked about these just a week ago on the show, September 9th. We talked about some put love in VICI, the SEP 30 puts. Obviously, those are going out tomorrow, so we don't have the full picture on these right now. In fact, that picture may evolve looking at where the stock is right now. On the show last week, someone came in and bought 5,000 of the SEP 30 puts. We talked about these for the old 3/8. Haven't seen that in a while, but they bought them for that. You don't know what 3/8 is, listeners. Look it up. And there was about a 29 vol out there. They pretty much lifted the offer. The stock was at 30 1/4. And looks like, looking at the chart here, it looks like they bought these right on the heels of maybe an earnings or something else where just the stock got hammered from about $32. And by the time the show came out, it was trading almost $32 on the 8th. And on the 9th, it was trading right around $29.80 or $29.90. They bought the puts when the stock was 30 1/4. So they pretty much bought the puts right around or close to the low of where the stock was, which is never a good sign for someone buying puts, listeners. Because the stock got down to about 29 3/4, and they bought this when the stock was 30 1/4. But since then, it has pretty much rallied, got back up to 30, and it's kind of hovered around this 30 strike level. So these 30 puts are still kind of in play, even though they have eroded down to pretty much nothing. The stock is hovering pretty much almost exactly at $30 right now. So this is what we talk about, listeners, with the old pin. What's going to happen? Is it going to hang here on this strike? If this thing ticks in his favor tomorrow, he could actually get out of some of these puts for something. Who knows if he can get all of his 3/8? Of course, if the stock sells off a bit, he might be looking all right. Not surprisingly, these puts are still open, and they have pretty much, like I said, eroded all the way down to nothing. So he has pretty much at this point lost all of that money. He's got about a nickel of it left pretty much out there. Mr. Rock Lobster, we've got someone, he looks like he's got about 180 odd grand he's shed so far on this trade, but he's still got another day and a half or so out here, and anything could happen. He's pretty much at his strike now in these puts. So what are your thoughts? These things going to go the way of the dodo, or is he going to be able to get out of them? And also, if they're hovering at like a dime tomorrow, is he going to have the wherewithal to close them, or is he going to watch all his money go to zero, sir?
I think a lot of people are sitting here at this cycle with the same type of, they thought, we'll buy some puts. The market can't keep doing this, blah, 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 blah. And guess what? Most of their puts, at least today, I would just say at least today, tomorrow could be another day. But you're not getting a lot of action. And it's hard to get a lot of action out of an 8 realized vol market and 19 VIX. I could see if VIX was 12 or 11 or 10, and those values would be kind of fun to trade. But we don't have that right now. So, and this one looks like, I guess I think lately, what is this? This is land around Vegas and stuff like that. It's probably REIT, but it's Vegas related, and I think a lot of Vegas related properties have gotten smashed recently, like like Sands and everything related to Macau, possibly with China. They got to slow down, all that kind of stuff. Sort of, it sort of blends together, shall we say? So this is one where I'm like, do I like the idea? It had potential, but you didn't get the rest of the follow through. So I would just say on this one, reasonable, but I don't think they're going to get any love out of these puts. But again, it only takes a 1% move tomorrow to break even. So the price was right. That's all I guess I can say on that one.
Given what we've seen in the past on these, and the fact we've had people buy premium, see big moves in their favor, and then do nothing with them and watch those, whatever they bought, calls or puts, go to zero. I'm going to have a feeling this person is going to have these move a little bit in his favor tomorrow, maybe a dime, let's say, and not going to do anything with them. That will come back to haunt him. Let's go out to August 30th to everyone's favorite cereal company, Giz, aka General Mills. At the time on August 30th, we profiled someone, again, getting the old put love here. There was the SEP 60s going up 4,000 times for $275. That's pretty meaty. The stock was $57.80. That's only a 26 vol, but yeah, these puts were obviously several bucks in the money. So that's what happens when you load up on in the money puts. They're going to be pretty meaty. 4,000 more traded on, 4,000 traded that day. On stock was $57.80. Again, So they bought them for 275. Then I guess they decided they wanted more because they came in the next day, bought 4,000 more. So again, total of 8,000. The price was similar, right around $2.50 for the second kind. So we got about 8,000 open, a little more actually, total of 9,800 total open on that strike. And now, again, these are expiring tomorrow. And right now, again, a similar situation. These are actually still in the money, though, because it looks like this person, when they bought this, they said the stock was $57.80 when they bought these back on August 30th. And since then, the stock has kind of vacillated a bit. It sold off down to $56.79. So they had that one brief moment. That was on the 7th of September to get out of these things for a bit of a profit. Then it rallied all the way back up to nearly 60, 59.40 or so the next session. So it got all that back. So whatever sell-off he was worried about, looks like it happened, but it was very short-lived. And then the stock kind of drifted back down to right where it is again right now, right around 58.5. 58 3/4 in that range. So these puts are still in the money, right around $1.50, $1.60, but obviously a far cry from the $2.75 that they paid for the first ones and $2.50 they paid for the second ones. Now, some weird paper has gone up since then. I mentioned we did the 4,000 lot that we first profiled. 4,000 went up the next day, so that increased the OI by appropriately enough 4,000 more. And then 8,000 traded on September 14th, so a couple of sessions ago. Someone sold 8,000 of them in one block for $1.15. Now, that to me raises the hackles because you see 4,000 and 4,000, then 8,000 trade a couple of weeks later in one big block. Probably the same customer. The weird thing is the OI shows that it was pretty much unched the next day. That to me is strange. So they could have inspired similar paper, the exact same size on the exact same strike. That to me is weird. So I'm kind of wondering if this OI number is not correct. Kind of going back to that chart I saw before, because it kind of fits together as a nice package that they bought them for $2.75. Then they panicked. They kind of got the heck out of Dodge for $1.15. That's what they sold them for on the 14th. If that is the case, then they're out nearly about $1.1 million on this trade. So not good, but in which case they're already out. But it is showing that there are still 9,500 open on this strike. So weird stuff afoot. Mr. Rock Lobster, what are your thoughts on these puts in the money, but not quite as far as when he traded them? And also, what are your thoughts on this almost identical paper? It looks like it's closing, but the machine says it's not, sir.
Yeah, again, it just looks like there was a little bit. What do you say about this one? They bought some puts. I thought like General Mills, I was looking at Kroger earnings, like it just traded almost $48. Now it's almost $41. And they were warning on like supply chain issues and stuff and commodity prices. And General Mills, they make cereal. So I can see why they were interested in purchasing these because, you could, just because they're General Mills, they buy a lot of raw materials. So that could hurt profitability. It looks like it sold off a little bit. So they might have got a little bit. They got like mini love, but not a ton on it. So again, a reasonable trade, but short-term trading, you got to take your money when you have your chance. The stock did trade down to, they had one day where it did drop below $57. So, at best, maybe they got 50 cents for those things. I don't see that closing action there because that date was on the 7th. So it doesn't appear like they closed it for a very good price. I think they just kind of took their loss there because, some of that supply chain news was bad, but General Mills just went flying right after it. So I'm just thinking they're taking their lumps and they went home on this.
That's what I thought as well, even though the machines are all crazy today. Show me crazy prints on the SPAC. Show me crazy opening numbers on these puts here. So, yeah, sometimes you just got to go with your gut. And my gut says exactly what you were thinking. That looks like they close them. Looks like a duck, and it quacks like a duck. It's probably in our mail block, so let's get to it.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Got our chat all fired up about JetBlue. Mr. Unlimited saying JetBlue OX 16 calls just did some paper. And Nichols chiming in says he saw those too. Can we talk about those on Oddities tomorrow? Pretty please. Our chat is so nice. Well, it's your guys' show. Oddities is your show. So, yeah, we could certainly talk about JetBlue calls. We will put them into the rotation. I got a feeling there probably will be some uranium going on tomorrow on Oddities as well as a whole bunch of other fun stuff. If you guys in the pro level, if you see crazy trades going up you want to talk about, hit us up. We could see if we could squeeze them into the packed Oddities schedule. If you don't know what the hell I'm talking about, theoptionsinsider.com/pro, so you can join in on all the fun. Speaking of fun, we got a fun one going right now out there on the old Twitters with quite simply, let's get reductive. Let's break our trading down to brass tacks. Everyone knows about the Greeks. The Greeks should, in theory, inform every aspect of your options trading, but in practice, traders tend to focus on different Greeks depending on their trading style and their position, and so on and so forth. So we asked you quite simply, which Greek do you find yourself using the most in your options trading? Delta, Gamma, Theta, or Vega? And you guys have all sorts of thoughts and ideas about this, but let's go on out to the unklest of Mikes first. Mr. Uncle Mike, which of these Greeks do you prefer? And B, more importantly, what do you think our audience is lining up behind?
I'm going to try and struggle through this. I'm still upset about Roe not being involved with this, but
yes, you vented your spleen on Roe earlier this week, sir. We heard you.
Yep, I know. But I will say that ultimately Delta is what I look at, but Gamma is one as well. I'm not too much of a Theta guy just because Vega messes with my Theta too much. So I'm more of I'd have to say Deltas overall, and I think the audience would be the same, but I would guess that Theta is in there as well.
Mr. Rocklops, the same question for you. If you have a preferred Greek, have at it. And more importantly, what do you think our audience is lining up behind, sir?
Well, I would say you preferred Greek. I say your preferred Greek is the one you want to trade. So TOSAW is a Delta trader, and he sells put spreads, and he does covered rights. So his Theta is kind of pre-baked in the trade. So he will look at vol. So me, it's where I feel the edges. So I like the Greek where I feel the edges. So if I think the Deltas are cheap, that's where it is. Gamma is cheap or expensive, that's where it is. Theta. So what we teach is you have to love the Greek you have. So if you put on a position with a dominant Greek, you have to like it and think you're going to make money with it. So I don't have an answer for that, honestly. I will say I'm going to guess the audience is going to say Delta. But that is how I handle the Greeks as far as teaching it at the old option pit.
Yes, I kind of had a feeling this would break down as Delta and probably Theta right behind it, and that's pretty much how it's breaking down. Delta right now, 50.8%, so the clear number one. Number two, Theta, as expected, 23.8%. What is surprising me, though, is I thought Gamma would be a distant afterthought from most people. They trade a lot of Delta, obviously, but they may not realize that and know that. So I thought they would go Vega, but no, Vega is actually in fourth place right now, just dropped recently. Gamma shooting up to third place, 14.3%. Vega in the rearview mirror, only 11.1%. Does that shock you as well, listeners? Are you up in arms that Vega is losing out to Gamma? Get in there at options. The clock is ticking. I got about 24 hours left on this bad boy. It is a question of the week, after all, out there. A lot of people chimed in on this. All sorts of different thoughts, including some jerk named Uncle Mike. I don't know who that guy is, but he chimed in with Roe all the way and a bunch of exclamation points. Even though we said no write-ins for Roe, Uncle Mike wrote in for Roe. Anyway, the notorious Piff said he had, people freaked out by our poll. I didn't think about that, but in hindsight, it makes some sense. He said, I had to double check to make sure this wasn't a new COVID variant you were talking about. Age of Delaquarius, what a name. He says, I'm on Team Theta, but he also says, I wish I could go back to the days when I only thought of Delta as a rate of change. Yeah, I'm with you there, Age of Delaquarius, and everyone else who wrote in with similar sentiments. And then Larry Williamson said he's in for Vega. He says, if you trade volatility, the stuff that I personally love, and secondly, all traders have to at one point deal with Delta to hedge their options positions. And he put hashtag love this stuff. So yeah, we love this stuff too. And it's an intriguing poll. And seeing how you folks are breaking down is pretty fascinating. At options is the place to go to make your voice heard. As we head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we go around and see what everyone's keeping an eye on into the weekend until our next episode. Mr. Uncle Mike, we'll start with you, sir. What are you focusing on until we gather here together on Monday?
Continuing to focus on the numbers, wanting to look at the 4,500 level for the SPX, seeing if we can make a run at it either later today or tomorrow. Watching the 10-year, we had a little bit of a sell-off today, seeing how that continues to move. And then this whole VIX thing that Andrew keeps telling me about, where the movements are, watching that as well. So a lot happening.
Well, there we go. A lot happening in the land of Uncle Mike. And Mr. Rock Lobster, what about this VIX thing everyone's always talking about?
Well, I mean, we were looking at the show, and Mike was saying, well, hey, the VIX is totally down. And I go, he's right. It's only up 13 cents with the market down a little bit. And it feels like it's going to go right on the day. And I guess this is the end of the sell-off because, 5.4% inflation, runaway government spending, a pandemic that everybody keeps changing their mind on how to deal with. But, those are all things that make the market go up at 30 times trailing earnings. So I guess, like we say here, trade what you see and not what you think. So today could be an interesting turnaround day and quite possibly push us toward highs again. So, if you can't get the sell-off today, I think this is a key day. I'll give Mark credit for this one. He kind of called us out on Friday and sort of working a plan. So I'm not going to complain. The vol comes in a little bit. What I would like to see is if we could actually see get at least to the vol low by tomorrow into the close. I think that would be interesting given the lack of movement and see if there's actually any willing sellers of some near-term stuff. So that's kind of what I'm looking at right now. And that's it, to be honest.
Well, that music means that's also it for our show. But don't worry, if you're listening live, then, of course, we got TWIFO coming up in about exactly half an hour. Pump some fun stuff into the live chat. We'll be back then to talk about all things futures, options. Listening after the fact, just hit next, and you'll have TWIFO ready and waiting for you there. But before we go back around the horn, Mr. Uncle Mike, if folks are intrigued, they want to hit you up talking about all these deltas that you're paring down to 3, where should they go? What should they do?
You can follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com. If you're looking for a financial advisor that looks at delta, and I'm not talking about the variant.
No variance for Uncle Mike. And speaking of variance, the Rock Lobster is very variable. Mr. Rock Lobster, sir, where should folks go to learn more about capital gains and everything else?
Come on over to OptionFit.com memberships. Talk to Ted. 888-TRADE-01 as OptionFit grows by leaps and bounds. You know what's funny? After this year and a half, people want to learn a little bit more about options. Go figure.
Go figure, indeed. I heard a stat on my smart speaker this morning that 20 million new retail trading accounts have been added since the beginning of last year. That seems kind of high, but hey, you never know. Crazier things have happened. And a good portion of those heading to the world of options and, of course, to the network and all the other fun therein. So thanks for joining us. We'll be back again a little bit later today for TWIFO. Of course, back tomorrow for Vol Views at noon, and then Option Oddities for all you pro folks at 2 p.m. Central. And then, of course, back again on Monday, another episode of The Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.